Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome back to another episode of That Annuity Show. Bruno, good morning.
Good morning to you, Paul.
Yeah, it feels like Canada in New York today. Very, very, very chilly, but glad to have you here. And welcome our listeners. We have a great guest today, and we're thrilled to have Karen Monks with us. Karen is a principal analyst specializing in the life insurance space at Celent, where she focuses just on sort of technologies shaping the business. Karen, welcome.
Hey, thanks, Paul. Very nice to be here. Actually, I can honestly say this is the first time I've ever done a podcast, so I'm excited to be here for multiple reasons.
Excellent. Well, we're a really tough crowd here, so.
And you start with the best one, so that's perfect.
Yeah, exactly. So very funny.
Yeah, well, for the people who listen, can you sort of tell people, like, who's Celent? What do you do? And then tell them a little bit about how you got into the role of an analyst here, and kind of what you've looked at over, the course of your career.
Sure. So, as Paul said, I'm Karen Monks, and I am an analyst in the North American insurance practice at Celent. And I've been with Celent for 15 years. And my background prior to becoming an industry analyst was actually I was a management consultant, both for and within financial services organizations, life insurance companies in particular. So when I worked at Coopers & Lybrand, I did a lot of work understanding the intersection of technology and operations for financial services organizations. And that brought me in-house at John Hancock, where I did a lot of work in understanding, again, how technology can improve operations. And it was through there that I actually got my job at Celent because one of my coworkers at John Hancock invited me to interview for Celent. And I asked him, what is an analyst firm? And he said, well, we pretty much just do research and consulting on what life insurers, and that's what you'll do, is the life insurance practice, need and want and should be thinking of in the future. So Celent, is a great company for any financial services organization who really wants to understand how technology can make them better. We answer a lot of questions for insurance companies, banks, capital markets, investment banks, wealth managers. And we do a lot of work associated with what should I buy, what's coming around the corner, what are my peers doing. So with the research we do, which is usually primary research with the vendors like Zinnia or others that sell commercial off-the-shelf software, we'll get a lot of data that can help an insurance company decide what to buy. And then we do a lot of survey work as well as secondary research to understand and talking to our clients, actually, which is primary research, understand what keeps them up at night and what do we think is going to be coming around the corner that's going to perhaps ease that sleeplessness.
Interesting. Yeah, it will real small, a very small world. Just as a little bit of my backstory, the first insurance company I worked for was John Hancock.
Yeah, that's
as a
awesome.
consultant in the group. Back when they were in the group health business, we were working with them. Then I worked across the street at New England Life for a number of years.
Yeah, just literally across the street.
Yeah, literally across the street. Well, maybe the first one we could dive into. I'll grab the first question. Karen, we had a really interesting conversation out at ITC about artificial intelligence and life insurance operations. I think we were specifically talking about underwriting. Just really would like to get your take on it, because I think there's a lot of interesting work taking place here in this field right now.
Yeah, there is. And this is actually an area that I do a lot of research on in this life insurance underwriting space. In the past, I want to say every 2 years, I look at all the different commercially off the shelf systems that are available to life insurance companies. whether they're using it to underwrite a life insurance policy or using it to, do the whole case management and suitability associated with annuities. And what's really interesting, I think, with the artificial intelligence and how it's transforming the way underwriting's done is that it helps the life insurer use some advanced algorithms beyond the basic yes/no algorithms that they may have used in the past when they would look at, an EAP and say yes/no related to do they meet my underwriting rules. But now they can use machine learning techniques and start analyzing large amounts of data and generate insights that help them make these more informed decisions, not only about risk, but maybe how to price that unique policy for that individual. They actually today are starting to go in and looking at the data that comes in from the application, the third-party data, and putting it through some of these machine learning algorithms that can find non-disclosures or be able to look at lifestyle information, if they decide to look at, perhaps a predictive model. They're generating a profile of the policyholder that actually helps them decide what third-party data do we need that if in the past they may have looked at a whole bunch of stuff, but today they want to cut costs. So they want to make sure that what they are looking for today is only what they need instead of having too much data that it would be manually reviewed. And so the nice part about what they're doing with AI is it's identifying data patterns more accurately and sometimes more instantaneously, that they can point out exactly what's relevant and what's not to an underwriter. And it allows them to assess them at the appropriate level of risk, ask the questions that are needed for that level of risk, and then hopefully provide a better customer experience by requiring fewer responses that are needed by the responses in an application, for example, or just overall in time for the customer who's making that application. And one part that I thought was really interesting is this year in looking at the systems that Gen AI has popped in. And how Gen AI has popped in, it's really powerful. And some of the vendors have really leaped forward in that they're reviewing and summarizing large volumes of unstructured data. So most of the time, the AI that we had seen before was all unstructured data. Now, if they can go in and look at unstructured, like an APS or an EHR that you would think it's structured, but there's no standard yet in the way the EHRs come in. But they can take that backbone of health data and, bring it into a large summarization, or take that large data and summarize it for the underwriter to be able to say, these are the areas you need to look at. These are the only things you should be concerned about, instead of, spending time looking at a 45 to 145 page document.
Yeah. Well, this is one of the areas, no surprise to you, where I've been putting a lot of energy and had some discussion, with my company. I'm on this. Limmer has a AI governance group. Kartik over there has done a great job, pulling a lot of people from different companies on there. Karen, kind of the divisions. I think the group is sort of focused in on, and I forgot which regulatory entity kind of set this sort of.
No, I think it's the NAIC.
Yeah, the risk. Yeah,
Yeah.
they've kind of set these risk buckets: high risk, medium risk, low risk. How do you think companies are approaching the high risk, and is that really where the most value is? Like high risk in my vernacular would be, should I give Bruno should I rate him preferred, or should I, give him a rated case? Versus probably what I would say is, in my head, classified as low risk is, to your point, what did this physician's report actually say? What should I ask for it? How do you look at the divisions? How are people navigating it? Where do you think the biggest opportunities are on either part of the spectrum?
Yeah, I think what's happening is it was an interesting time. I'm going to go back a little bit. COVID, for example, brought about this mentality for a little bit that they can do, people realize they need life insurance, and they've got these D2C, the direct to consumer products that they started putting out. There's your definite low risk. Because they're quite often, what historically we used to think about as being like maybe a guaranteed issue or a simplified issue product, and it would be rated higher just because they didn't have the data to be able to go in and say, well, we're just going to give you this policy, but we don't know that much about you. But during COVID, what they found that was if they went D2C and they created a digital product and they started using automated underwriting rules, and then you can start throwing in other things like this AI to be able to standardize the data more, then it allowed them to be able to say, well, let's take some of these digital products that we used to think were high risk, increase the face value, increase the age limit, and use more data in a more effective way that we can actually put more straight through processing going on to be able to move beyond just that basic algorithmic rule that they used before, yes, no, on the first 7 questions, and say, let's use third party data from all these different sources and reduce that risk. And which just actually bodes well for the industry, I think, because then it allows for a greater number of products to be sold more, I guess you would say simply, but in a way that's not as invasive as in the past. Because the invasiveness and the length of time was what often sort of impeded the insurance industry from being able to get that feeling like you care what happens to me. You're more, you're more interested in that long underwriting process, and it just feels like it's very intrusive. That still could happen for a much more, a higher face value, perhaps an older person, only if they're buying a much more complex product, one that might have cash values, one that might be a hybrid. It's going to be attached to something else. But, we've seen that move from away from just a term at a $50,000 or $75,000 policy to you could get a term up to $2 million, or it can be a whole life or even some basic UL that's going to go through more of a straight through process. So I think the use of data and AI has changed what we think of as simple or less complex, and made it more manageable to go into what we thought was more risky, I guess high risk. I think that's probably one of the best things that came out of COVID.
Oh, that's an interesting way to put it. Yeah. So I have a question that it kind of surfaces your entire career, and I'm very curious to know, what's your opinion on what are the driving forces for companies to adopt technology? Like, is it compliance? Is it sales? Is it efficiency gaining? So, because the big companies always have some, decision-making process that's not always very clear and transparent, and not always necessarily logical. So, which part is it? Is it sales? Is it compliance? Is it just keeping up with the Jones? What drives those decisions at a high level to embrace and enable technology?
So it's a great question, and it's something actually Celent looks at yearly. I have the data not fully analyzed. Actually, I could probably pull up my spreadsheet today and go in and look at it. But we actually ask a question that's associated with what is the driving force between behind your investment decisions when we ask that question of CIOs or chief technology officers. So chief information officers or chief technology officers. And over again, growth is usually the driving force, which doesn't surprise anyone. They want to grow their business. They want to make sure that they continue selling. What we find, though, is quickly behind it becomes the idea of efficiencies and operational efficiency as well as technological efficiency. And the technological efficiency is because, we can all think back to the very first, I'm going to age myself a little bit here, but it was probably shortly after I was born, but the very first Life 70. And those technologies that came out of the IBMs of the worlds, the CSCs of the worlds, all of them were some of the very first technologies that were done on a major scale in a company, in an enterprise, and they were done by life insurance companies. The sad part is that Life 70, which was, I think, built in 68 because they were thinking, we're forward looking, we're going to call it Life 70, those are still in use today in many insurance companies. And so when you think about technological efficiency and you think, I am working on a 50-year-old plus system, is it going to last for me? And do I have people who even still know how to use it? And that part becomes really important as you think about what I was just saying. Let's move into digital products. Let's move into a way to sell things more easily. Let's use more data. Well, those systems were not built to be open and accept that data. And so as anyone wants to move into a future world where AI and data is going to drive decisions, you can't easily do it with a legacy system that's 50 years old. So what we often see is them saying, I want to grow and I want operational efficiency, but I have this legacy system that's sort of tailing me everywhere I go, but it's stable and it's probably not too expensive to run. But that run cost is only one part of it. What's the whole other side of what's the cost? What's my opportunity cost that I'm losing by still running something that's that old? And so all of that comes into play when they make a decision as to what are they going to do. And, sadly, a lot of people may have lost their jobs in trying to convert an old system onto a new system. Fortunately, they can make decisions today that allow them to keep that old system running, pull the data out as needed, and still move forward and become more of a digital forward-thinking company.
Yeah, Karen, I'm a big history buff. And when I worked at MetLife, and I remember finding a picture of a big, huge construction crane hoisting one of those big IBMs into the company at 1 Madison Avenue. Anyway, it's interesting, right? How it was. I remember then traveling up to our data center in Rensselaer. So this was probably like.
Oh, I went to school right near there.
Oh, you did? Okay, well, they had their huge. Okay, second, well, they had their huge data center in Troy, and I remember going in. It must have been, just to show you sort of the time frame. It was Bruno, I think it must have been like early 2000s. Karen, I walked in here. They had sort of the space, ship Enterprise console to show people. And I said, well, let's go in and see this thing. And even at that point in time, it was a big hollow building. It had shrunk.
Yeah.
So like,
you think about that. Yeah. Because now, what used to fill, like floors of data centers now, it's like the servers are so, and everything's off. And now with the cloud, it's not even the data center for the insurance company is on-prem. It's not there anymore.
Yeah. Now kind of back to Bruno's question around the decision process. The problem I saw there and a couple other subsequent companies was people wanted these things. They wanted the modern experiences, but the decision-making still was kind of old because it was, to your point, everybody wanted growth. And the IT cost allocation process was, well, show me the ROI. And it was easier to show the ROI for, I'm going to add this new writer, I'm going to add this new product. Well, what's the ROI of changing your, modernizing your system, paying down, the old world, what was it, paying down your technical debt? Has consumer experience changed the way people think about and factor their investments today or not?
I think, it's an interesting one because you can argue, like, who's the consumer of a life insurance company? Is it the agent or is it the end consumer? And I think both of those have to come into play when you say, who am I? Who's my consumer? Who's my customer? I think that it comes into play in as much as if you think about growth and you say, what products should I sell? Well, can I sell those products on the systems today? Because I need to be able to offer, better service. But in the life insurance space, I think it's a little bit different than the annuity space. But in the life insurance space, for many times, the customer, once they've bought it, their interaction with that life insurance company is to pay a bill on a biannual or an annual basis. And then it's claims. And it's not even that customer anymore. It's potentially their beneficiary. But if you move into a product, as we're thinking where the world's going to go, and they're more wealth management oriented, annuity oriented, maybe a tie into some type of, an investment vehicle. It's more of a cash value vehicle. They need to start thinking about, how do I provide more real-time data? How do I provide more information when the person needs it? And and then that means you definitely have to get out of the batch mode that they used to be in with the legacy systems that have to run a batch every night, and you don't get your information until the next day. You can't process a transaction till the next day. No one wants that today. And I think the other thing is if the consumer starts comparing against the experiences they get outside of the insurance company, and they compare it to a bank, or they compare it to Amazon, or they compare it to any online, then that starts coming into play and saying, how do I make my customers as happy to work with me as they are to work with other organizations? So yes, that comes into play. The challenge to all that is, Bruno, you brought it up earlier. It's not that they don't think about regulations. Those are driving a lot of what they do. They're just not the top. But those regulations and the Department of Insurance that might exist in every state is also overlooking them and saying, well, you can't just go willy-nilly and change everything without making sure you're meeting, the compliance and regulations that need to be factored in. So there is a push and pull and a tug in all different directions. And when it comes down to that ROI, we've done research, and I think it was probably 4 years ago. Now, things have changed because they've become more cloud driven than 4 years ago. But I don't think the results would change if we were to ask the question, can you find a positive ROI in X number of years for any one of your major investments? And most of the answer is no. That there's too many, there's the what's the word I'm looking for?
You just can't put it on a spreadsheet, basically.
You can't put it on a spreadsheet. Exactly. Exactly. Like, there's all these indirect savings. There's indirect costs and indirect savings. And to be honest, the cloud itself can be expensive, even though you're moving out of the capital cost into more of a transactional cost. But if you start moving into AI, and especially with this Gen AI and large language models, it's going to be huge savings when it comes to time savings and accuracy and everything else. But then there's the back end costs of the computations. And then you're like, well, how do I weigh all that? So I think sometimes the ROI is out there as it's a driver that they want to get there. But sometimes I think they have to make a decision without knowing if they're going to attain it.
That's tough in this business.
A certain amount of, it's very tough, right? Yeah. And it's a leap of faith.
Right. And we're very data-driven industry by culture. I don't know, Bruno.
Oh, it's funny because I can relate as a financial analyst. Ratings, a lot of ratings are based on quantitative data and metrics that are out there, but there are huge qualitative factors.
That's the word I was looking for, the qualitative. Yeah.
That you can't just put on a spreadsheet. You can't exactly. Just but you have to factor in they're important. They're out there, and they have to be to be considered. So it makes it very, very difficult for like a management team aboard to make it very easy. Say, hey, we do this, we get that. Okay, next topic. It generates a conversation, it generates a follow up, and you just don't close out the issue that quickly. So no, those decisions are difficult to make for big organizations.
One of my very big jobs at John Hancock was, and I mean, till this day, it's just, we're so proud. So Craig Weber and I, who used to work at John Hancock, and he's the person who brought me into Celent, we were helping decide whether or not we were going to help John Hancock. Well, we were deciding how to help John Hancock move to an image system. The 5th floor of the tower was all paper. And then another building was paper. And we said, well, we need to image that because there's the rent you can get, but we also know how much time savings it would be to make sure that someone can have access to those images when they need them and didn't need to have the cart come around every day with the folders. And we went and we did an analysis of how long it would take for them to, image something, scan it, image it, about how long it would take for them to break up this, all of the folders and get it in there, how much square footage there was, and what day it would happen. And we were a day off. And I would be like, and then of course with that, we had, like all the money savings based on this and the rent coming in based on that. And we're like, I think if I tried to do that again today, I don't know if I could, because there'd be all these other factors that we would have to come into play, because there's many more. It's not just one system. There were multiple systems you'd have to think about today. And, it was an interesting one, but you're right. It was like, there was a formula that you could do. I'm not sure that formula is as easy today.
Well, no, and to your point, I think like, okay, if you're going to do anything on a website, do anything with a mobile device, you've got a thin layer. You kind of alluded to this with some of these mainframes. Approach is, let me separate the experience or the UX layer, and I'm going to have all these systems behind it.
Yeah.
That's different. That's kind of a different procurement process potentially, because now I'm not looking at a product. I'm looking at your APIs.
Yeah.
And I'm looking at a set of APIs. How does that change the procurement, the vendor, the landscape? Is somebody going to, do you think, the companies like Zinnia in the future are going to be more around that experience layer, and those will be the RFPs, or it's still going to be but tell me about the system that's hooking in with the APIs. Somebody else is going to be owning that experience layer.
I think it's going to be, I'm almost going to say all of the above.
Okay.
You've got the person that, you've got to have all the different people in the room, because you've got to have the person who, the legacy systems most likely aren't not fully going to go away. So you have to have the understanding of, what do you need to take out of that legacy system? You need a group like Zinnia and what you're building for that, quote, middle layer with all the microservices and the APIs that are going to drive it. But then you've got all and someone's got to understand how that's going to work. How are those integrations going to work? What data do I need to flow in, flow out, and making sure it all works? But then you've got every other, whether it's an insurtech, it's an internal system, whether or not it's other vendors that you've been working with in the past, or the new systems, especially now that, a lot of the commercial off-the-shelf PAS that people are buying are for greenfield. They're going to be like, here's my new code. These are all my new digital products. They're on there. I need to have the customer centricity to be able to make sure that the old products these people own and the new products can be on their same portal or mobile device or whatever it is, that the agent can see it all. And every one of those people in the room are a stakeholder of one of these systems that has to be integrated in that middle layer. And I do think that it's a special person who can see it all play together. And that's probably the CTO who's looking at the whole architecture, or some chief architecture officer that's being able to say, I see how this is all going to work. Because you're going to have little services that are going to be hitting at different times with different APIs running at different time, and then who knows what happens when the products change and you
Right.
move into more of, like I said, more of a wealth management world than your traditional, just life insurance product. I think delivering that modern interface is important as much as, but as important is that middle tier that's going to be able to make sure that modern interface presents the APIs with the right data at the right time in both directions. I don't know if that fully answered your question, but I do think it's a different procurement model, but I think it's integrating procurement, IT, and the business areas much more than they probably have in the past.
Yeah, I no, listen, I think you're right. I saw, I didn't actually see it. I heard of this, an RFP that went out from one, well-known company where they put an RFP. This is interesting. Put an RFP out to, I think there were 5 sort of almost like business goals. It was interesting, like to help me improve my agent retention. Okay, well,
Yeah.
it's going to be illustrations, new business, right? It's
Yeah.
your e-apps. Okay,
Right.
that's different.
Well, and you see things that are coming through. I was just talking with a vendor yesterday, and they didn't sell just a policy admin system to their new client. They sold the entire ecosystem.
Interesting.
And so their ecosystem, and it's a good size insurer, but their ecosystem is everything from the policy admin, which will act as the system of record, and of course, some servicing. But it's got this whole digital layer that's all around it. It's got the ability to do microservices into, like you said, illustrations to underwriting, to an e-app or illustrations e-app underwriting. And then all within that is data and analytics. And so they're looking at it like, I'm not going to go out and sell just single systems anymore. I'm going to sell the ecosystem that needs to help them work and do their business. Not everybody can do that. But if a vendor could, then, is it going back to, it's certainly not the monolithic systems of the past. There are components or microservices that can be pulled when needed. But if they don't decide to do that, and many large insurers won't, then of course they need to make sure that they've got the right people and the right technologies that allow them to integrate where they need to, when they need to, and get the data they need.
Well, we're almost at the top of our end of our time. Bruno, what questions do you have for Karen?
Many. I'll try to keep it short, but that's not always easy. From a technology perspective, there's definitely a gap between the insurance world and the investment world. Do you see any improvement or any ways to improve more cohabitation between the two, so that those products can be accessed either through the same platforms or access through or ease of choice, basically.
I think I agree. Those gaps are there, and I think they're big. I don't think it's narrowing yet, but we just had a call with a tier 1 life insurer who that was exactly his questions, is how are we going to do this? And that's the part that I think, as we were talking to them, that, as I mentioned earlier, what Celent tries to do is we try to think about what's coming down the path. And I think what that is going to require is companies there's a couple tier 1s that you can think of who, they have a wealth management arm to them today, and they have a life insurance arm. And that's breaking down the silos between them, not only in the people and how they work, but the technologies themselves. And I think it's going to be driven by sometimes the brokers and the agents saying, I need access to both. I want to sell both. Or I want to sell a product that is one that includes both. And when that starts happening, it'll people will start picking up the speed to be able to say, we need to figure out a way to incorporate more of the wealth side so it's not looking at mortality anymore. You're looking at the morbidity issue and getting those two to tie together instead of just thinking, I'm going to protect you when you die. I want to help protect you live in case you live long. And we don't do it that well, but those insurance companies like the one I was speaking with yesterday, just the fact that they're thinking about doing that, I think is going to help us get there. Do I have an answer today for you as to how to do it? No. But what I do see is that when we're global, and when we look at how the rest of the world approaches savings and investments in a policy administration system, they've stopped talking about it as a policy administration system for life insurance. They start talking about it as just a back office system for a financial service organization who can do anything from life annuity, pensions, savings, all of that. And I think that mentality has to move into ours, because I don't see many policy administration systems for life insurance in our country being able to handle even investment-backed products. And as those start getting asked for more and more, then it's going to make that move into other products that are going to be more like your wealth products. And I think it's just this mentality that we've had for such a long time. We're life insurance, and then annuities are a different group, and wealth management is yet even a different group. And I think the fact that in some parts of the world and in some companies here, they're starting to think about coming together, it's going to force a change.
I would take it a step further. I think term is one thing. UL is another thing.
Oh,
whole
huge.
life is another thing.
Other thing. Yeah, exactly. Well, and then you got the, indexed and like, and fund backed, anything that's every single one of them. And I look at that as like every one of those products has its reason for existing. But, even as you move into something that's like a hybrid product, I want to take a UL or a whole life and make it into a long-term care hybrid product. Like, I don't want to just pay my money out to my beneficiary. I want to use it to live longer in a long-term care facility. That, in a sense, is wealth management right there.
Mm-hmm.
It's just thought a little bit differently, right?
Yep, I couldn't agree more.
And those types of products are starting to be seen more and more. That you're making a hybrid product and being able to say, I'm going to take my cash value, I'm going to use it for something else.
Like, no one has ever come on this show has ever said that things should be looked at on a silo basis. If there's one area that everyone agrees is everyone should have a comprehensive plan and a comprehensive vision, and that every single one of those products affect each other, and at the end of the day, it's the global solution that counts for each individual. So, that's good to hear.
Yeah.
Well, I guess maybe we could actually end on a people question, Karen. I don't know how many questions you get like this.
Yeah.
I guess my experience has been, if you're putting new technology in or making some sort of big change, when it works is you have the right person driving the project, the right person with the right skills, right knowledge. Kind of looking at some of these, trends we've talked about, and AI coming into underwriting, thinking about UX layers and APIs versus. What are the skills that companies should be either encouraging their employees to get, or the types of people we should be trying to attract for some of to sort of propel some of these technologies forward?
I think one of the big ones, we had, Celent has all these meetings periodically with our clients. And one of them was really interesting. We had it with a dean of the Georgia Tech Business School, and then another one with South Carolina, who has an insurance business, like an insurance department within their business school. And they keep on bringing forth the idea that gone is the day of a person who has spent their entire career in one life insurance company, because you really need the experience of understanding insurance, but with it, you need to understand what's happening in other businesses and bring them. So you should be moving around. But their biggest thing was data, being able to understand how the data of the future, the data of today, and the data of the history of a life insurance company, when you think of how much data they sit on, how that can make decisions for the future. And so I think that person has to have a knowledge of other businesses. I think that person has to have a knowledge of just understanding how data impacts decision making. And I don't think they need to be a technological geek, but I think they have to understand how this world of integrating the data and making the data work between the systems is going to be really important. I think that all would be really helpful for someone who's making a decision as to what to do to move forward. But I think that external view of the world and data is probably first and foremost for me.
Well, thank you. And Karen, thanks for your time.
Oh, you're welcome.
This was great. Now, what's the best way for people to, follow the work you do, see the research you've done in the past? Is it to go to the Celent website?
Yeah, the Celent website. We're at celent.com. I'm, my email is really easy. Happy to have anyone email me as well. It's kmonks, KMONKS at celent.com. Our library is broad. It is sort of along the line, Bruno. It's like we have wealth management research, we have capital markets research, we have banking, and we have life insurance and property and casualty. All of the analysts are always excited to talk to new potential clients and be able to share our knowledge and gain knowledge from talking with others. So it's the life of an analyst.
Well, hey, Bruno, thank you.
Thank you, Bruno.
Thank you.
Yeah. And so anyway, Karen, again, thanks. And I want to thank our listeners. Make sure to share this episode with your friends. Leave us comments and reviews. And most importantly, join us again next week for another great episode of That Annuity Show. Thanks.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Spotify, or wherever you get your podcasts. You can also get more information or listen to more episodes at thatannuityshow.com. Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.